Hello traders and welcome back to the Forex Geek. In today's video we are going to break down a powerful price action pattern that can help you catch the next big bearish move in the market. So we are talking about a drop base drop pattern. So this is a key continuation setup that signals strong selling pressure and helps you identify supply zones where institutional traders are likely to step in. So if you've been struggling to spot high probability entries in a downtrend or want to improve your timing for short trades, this video is for you. Stick around until the end and you will learn how to identify, trade and profit from this pattern with confidence. So let's get started. So we're talking about the drop base drop, and this is a trading view platform, and we are on the USD card on the 1 hour time frame. And let's understand what the drop base drop pattern mean first before we proceed to trading strategies you can use with the drop base drop pattern. So first of all, the drop base drop pattern consists of three distinctive movements in price action: an initial sharp decline followed by a brief pause or consolidation, and finally another strong move to the downside. So let me just use the part 2 to show you what it looks like. Have an initial drop or decline, and this is actually very sharp consecutive red candles, and then you have a base or a brief pause or consolidation, then you have another drop. So basically drop base drop, have the first drop, have the base, then you have the next drop. So that's just exactly how it is. And think of it as the market taking a breath before continuing its bearish journey. This base right here is like a brief pause before the market continues. And the first drop represents aggressive selling pressure where larger players in the market are offloading their positions. So when you see this initial drop, pay close attention to the next few candles. The base formation typically lasts between 1 to 5 candles, and it shows a temporary balance between buyers and sellers. And this base creates a supply zone, a critical area where sellers are likely to regain control, but it is not guaranteed. Sometimes price will likely continue and may never come back, or when price comes back, it may just sweep it out. Price may likely continue going down, or price may sweep it out, but it's expected that price should react from this base and use the base as a resistance to push lower. So that is your drop base drop pattern. So what makes this pattern particularly reliable is its representation of institutional trading behavior. So when you spot a drop base drop, you are essentially identifying areas where major players are distributing their positions, and the base area becomes a significant supply zone. Where price returns to this level, it often presents a high probability trading opportunity. So we've discussed that. So let's hop on the charts. Let's try to find examples of this pattern. Just going to delete this. I'm gonna delete this. So you can see one. There's one right here. Have the drop, have the base. This is considered the base, like a brief pause, a consolidation. You can see indecision between buyers and sellers. There are green candles, there are red candles, there are wicks, and before the continue push to the downside, meaning that the sell is expected to continue, and it's expected that price should come back up and use this area as a level of support. The price actually swept through it and went to use this support level, which was the start of the initial move, and that is exactly how it is in the market. I'm going to talk about trading strategies shortly. Let me just show you examples of the drop base drop. So this, you have this one, you have the initial drop, you have this base, this period of consolidation right here, and you have the next drop, that sharp drop, the sharp decline, a base or consolidation, and a continuous decline. And let me look for another drop base drop. and it's best you look for the drop base drop in downtrends, as that is where you can catch better high probability moves with the drop base drop. You could, if you want to use the, if you want to trade uptrends, then you should consider the rally base rally. We've done a video on that. You can go and watch it on our channel, or you could just click above your screen and you're gonna see. You click the link on your screen right now, and it'll take you to that video. And this is a clear downtrend, so it was wise to look for a drop base drop right here. And let me look for another drop base drop. You can see this have the drop, the initial sharp move, then you have this consolidation before the next drop. This is the next drop, and this was in a good downtrend. As you can see, this was a good downtrend right here, and it was expected price should continue push the push to the downside to continue to break structure, and that is exactly what happened. So I'm going to be looking for more drop base drop, and you can see this one, the initial sharp decline, the drop, the consolidation, and the next drop, and it forms this base which is to be used as your resistance in the future. We're going to talk about trading strategies shortly, so ensure you stay until the end of this video so you don't miss that part. So this is another example of the drop base drop. You have the initial drop, the base, and the next drop right here, the next sharp drop. So could go on and on and on, but I think by now you should get the idea. This is the drop, you have the base, the consolidation, and the next drop right here. So, and you can see this was in a downtrend, so it was easy to spot the drop base drop. So let's talk about trading strategies. How can we use this drop base drop to trade? How can we use it to spot high potential, high probability trades in the market? So it's very easy. I'm going to show you how to do it right now. And first is you're going to wait for price to return to the supply zone. Okay, there are two types. There are two ways you can actually trade the drop base drop pattern. You either enter after the break of the base support or the base low. For example, you have this drop, you have the base, then you have the drop, and it could be wise to enter at the base. This is the break of the base, which is considered to be this area. And when you see a break below, a decisive break, you should enter. That's if you are not trading conservatively and you're a high risk trader. You could enter at that base with your stop loss above the high of the base and take profit at 1:1 or 1:2 or however you want it. So that is if you are not a conservative trader. And the second option is to wait for a pullback before entry. So waiting for a pullback entails you should wait for price to break and give us a pullback into this zone, and that's when we can think of entering. So when you see the pullback into the zone, you could check for candlestick formations, or you could just enter. You can see this rejection here, so we could just enter after that. And stop losses remains the same above the high of the base, and you could target a 1:1 or you could target a major support levels like this one. So but this didn't work out exactly as planned, so let me look for another example to explain it better. Now this is another drop base drop, and this was the base. So you could enter. If you are not a conservative trader, you could just enter after this breakout. You see this rejection, a couple shooting star candles and doji candles right there. So you could just enter after any of them with your stop loss above the high of the base, and your take profit could be 1:1 or 1:2 or 1:3, whichever one you choose, or you could target support levels like this one. Remember, you should be looking for this trade in downtrends, verified downtrends. So, and or if you are not a conservative trader, you could wait for pullbacks. You can see price reacting off this level to give us a minor push to the downside. So let me just look for a better example. Okay, this is another one. You could enter just at the break of that low of the base, and this was a very good downtrend, and you can see price giving us a very perfect drop base drop pattern here. This is the base. This is the base, and you can see that is a very good resistance level. It's expected price should get to this level and retrace to this level and give us a push to the downside to continue the bearish trend. And you can see price do that exactly for us. Entry could be at the retrace here, or when price started giving us a confirmation candlestick patterns, which was around here, and your stop loss above the high of the base, the drop base drop. Remember, this is the base, so your take profit could be at this support level or this support level, or at the trend line. So whichever one you want. Sorry about that. So let me just look for that example. So this is the example we are talking about before we were interrupted, and this is it. This was how we could catch this drop base drop pattern. If you are not a conservative trader, you could just enter at this break. This was a very sharp breakout, and target maybe 1:1 or 1:2, whichever suits you. And this was another drop base drop. You can see that, and price reacted off that base, but we didn't get an exact push to the downside. So let's look for more examples, and you should look for examples that falls in line with a downtrend. You can see this is a very good downtrend right here, happening right here, and you see price giving us higher lows and lower lows, and you can see this base right here. So this is the low of the base. We have price break through that, and if you're not conservative, you could just enter, but if you are a conservative trader, you could wait for price to retrace back into that resistance level and give us, you see this rejection candles showing us that yes, we should be looking to enter. And if you need more confirmations, you could put your volume 2 to confirm these trades. So let me just quickly add the volume 2. So this is our volume 2, and you can see that at this our entry here, you can see the increase, the max selling volume right there, showing us that yes, we should be looking to push the trade to the downside, showing us that institutional traders are still in this move and are interested in pushing the price to the downside. And if you want to look at this example, this very good example we had here, you can see this rising selling volume, selling pressure right here. And this was another one. And also in the formation of the drop base drop, you see the rising selling volume right here. Just annotate it. You can see it. This is it right here. This is another one of the second drop, and this is for our entry, and that is how you can confirm your drop base drop. So let's look at common mistakes to avoid when trading the drop base drop. So common mistakes is entering trades without confirmation. We just discussed that. And one of the biggest mistakes traders make is entering trade as soon as price touches the supply zone without waiting for confirmation. So whether it's tempting to jump in early, this can lead to false breakouts or price continuing higher before reversing. So always wait for confirmations when price returns to the support level. Like you can see price giving us This bearish order flow showing us that yes, we might be looking to push to the downside. Price just giving us a break of structure to the downside, showing us that yes, we should be looking to. And you can see this shooting star candle right here, or the inverted hammer. This is the inverted hammer right here. Just gonna circle it. And you see these consecutive red candles showing us that yes, we should be looking to enter. All of these were happening inside our resistance level. And yes, that was how we were able to catch this push, massive push to the downside. And as you can see here, we didn't see much confirmations. So if we just took our short trade and jumped in right here, it would have been a loss. So it's always wise to look for confirmations. You can see the volume doesn't correspond. There's less selling pressure around our entry. You can see more of increasing buying volume here. See increasing buy volumes right here, and less of the selling volume. So that is how you can confirm your base drop when price returns to the support level. So always wait for a clear bearish reversal pattern inside that supply zone, whether it's a pin bar, an engulfing candle, or another reliable signal. Like maybe you could use your moving averages or your RSI before entering your trade. So this confirmation helps filter out false signals and increases your chances of success. So another common mistake to avoid is placing stop loss too close to price action. You should place your stop loss well above, a little bit above the resistance level. As you can see, stop loss was a little bit above the resistance level, giving this trade room to breathe and move before we had the drop to the downside. And this might seem like a way to minimize risks. It often results in getting stopped out by minor market fluctuations before the real move happens. If my stop loss was just at that the high of that base, you can see this wick. There was a very sharp move. This wick, we had a wick right here, and price immediately wicked this trade and would have hit that stop loss. But just placing it a little bit above price, above the base, you can see price giving us that move, clean move to the downside. So you should always watch out for mistakes like that. Another one is ignoring risk management. So many traders get caught up in trying to catch big moves and forget about proper risk management. So even with high probability setups like the drop base drop, you must always manage your risk carefully. So risking too much on a single trade can wipe out your account if things don't go as planned. So always stick to risking a small percentage of your capital per trade, typically 1 to 2%. And this way, even if you encounter a losing streak, your account will remain intact for future trading opportunities. So another mistake you should avoid is trading the drop base drop pattern in non-trading markets, or in uptrends, or in ranging markets. So the drop base drop pattern works best in strong downtrends where there is clear selling pressure. And trying to trade this pattern in sideways or choppy markets can lead to poor results, because there isn't enough momentum for price to continue lower after forming the base. So you can see this was a clear bearish trade right here. So it gave us enough conviction that yes, after this base we should expect price to keep on pushing lower. And price was ranging here, and that is why this failed. You can see this ranging market right here. Price really didn't have a particular place or direction it was moving. Price was just ranging up and down movements. And it was around here we had a bearish push, and that was why we could enter this trade right here. And that was a drop base drop. Let me look for another one. And you can see this clear downtrend here. It's a clear downtrend, so we could look for good trading opportunities. This was the base, and you can see price respecting that resistance for quite 3 times, one here, and one here, before price push to the downside. Confirmation patterns here could be the evening star, You have the evening star here. You have the shooting star here, that rejection pattern, and series of other rejection candles. You see the rising bearish volume. So all of this confirming that yes, we are expecting a continuous drop to the downside. And same thing happened here. We had this base, and if you extend this resistance, you can see price giving us this inverted hammer here. So see this dodgy and see this consolidation here, and if you look at the volume, you can see that we have increasing selling volume, and it corresponds with this inside this resistance level. That was how we were able to enter for this push to the downside, and this gave us a very another wonderful trade. After we saw all these confirmations, we could enter with our stop loss just above that base, the high of the base. Your take profit level could be 1:1, 1:2, or you could target this support level right here for 1:2.86 trade. That was how we entered this drop base drop trade. And you can see here, I guess the downtrend had exhausted, and we had this push and invalidation of this setup. But price still gave us this setup now turned support as we broke it, turned support for continuous push to the upside. But that is outside our topic of discussion today. So that is it for the drop base drop pattern. I believe we've covered a lot. You've come to the end of this video, and if you found value in this breakdown and want more strategies to improve your trading, make sure to hit the like button, subscribe to the channel, and turn on the notification bell so you never miss an update. And thank you for watching, and I'll see you in the next video.